central banks have two masters. One is the government and the other is the banking system. They do serve both masters, and central banks do hold interest rates down to help governments finance deficits until the inflation gets really bad. And central banks do quash a lot of banking competition in order for banks to make more profits. Not so much through holding interest rates down, because you can't do that forever.
Well, John Cochrane, thank you so much for talking to the IPA. It's a great pleasure. Just for our viewers, let me introduce you. You are a senior fellow at the Hoover Institution, I believe, since 2015, a professor at the Stanford Business School, and certainly in my view, and I think in the view of most people, one of the world's top economists, I think without a doubt. You are the grumpy economist, I believe, on social media. So maybe I can ask firstly, why are you the grumpy economist on Twitter, or X, I should say?
Oh, that's just my brand name. I read a op-ed in the New York Times one day that I disagreed with, spilled my coffee and gave my children a lecture. And they said, we'll call your Substack the Grumpy Economist from now on.
Okay, no, it's fair enough. It's fair enough. I think there's lots to be grumpy about. Look, let's talk about inflation and fiscal policy, which obviously you are one of the foremost experts in the world. So, you know, the last 5 years or so, 6 years, we had the spike in inflation, of course, during COVID, which, you know, not many economic models picked up on at the time, which is somewhat embarrassing. So just a basic question, what caused that inflation spike in the US and I guess more generally in the world?
Well, of course, I think I have an answer, and I have an economic model. Excuse me while I pitch my book.
Totally fine.
Our governments went on a vast spending binge, $5 trillion of money in the U.S. with no plans on how to pay it back. And, you know, even Milton Friedman said, you drop $5 trillion from helicopters and you're going to get inflation. I think even more importantly was the no plan to pay it back part, which was emphasized in the U.S. when the government stayed on its spending binge after COVID ended. So you can't ask for a clearer example of how very large government deficits without a plan of how we're going to pay them back leads people to get rid of this stuff while they can and leads to inflation. So we had a big one.
Yeah. So would you say that's a monetary phenomenon then, or a fiscal phenomenon? What happened? I mean, obviously more money was pumped in, but it was also fiscal policy.
That one was mostly fiscal. Now, inflation in general comes from both monetary and fiscal policy together. The Fed in the U.S. did contribute to that inflation by buying a lot of the newly issued treasury bonds and issuing money instead. So we did really finance a lot of that by literally printing money. But it was interest-paying money, interest-paying reserves. It's not obvious that was first order. The Fed also held interest rates down for a shocking whole year after inflation kept down, and that certainly added fuel to the fire. That one, though, I'll say mostly was the fiscal stimulus. Other episodes have more direct monetary influences.
Yeah, so let's talk about your latest fiscal theory of the price level, I believe, is your most recent big contribution to the literature. Can you run through with viewers what that actually is?
It just says that fundamentally, inflation comes when there's more government debt overall. Money is just one flavor of government debt. So more money or government debt that promises to give you more money, that's what government debt is, more government debt overall than people believe the government will eventually repay. And then they say, let's get rid of this stuff while it's still worth anything. They try to buy goods and services with it. That drives up the price level. So that's really the fundamental driver of inflation.
Yeah, so would you say that theory is within the Milton Friedman framework or view of the world, or more in the Keynesian view of the world?
It's it's a third view of the world. I think both Milton and Keynes are turning over in their graves. Sorry. There's a lot of commonality with Friedman. Friedman thought it was too much money. And most of the episodes he pointed to were cases where the government was printing up money to finance deficits. So we're totally on board there. But whether central banks alone, can the central bank control inflation by taking in bonds and giving you money, or by taking in money and giving you bonds without changing the overall amount? That's where we differ. And I would point to the fundamentals of it is the deficits that central banks can't do all that much about when things get really tough.
If we go back to the global financial crisis, and I think we first kind of met at least over email, kind of in the consequences of that when I was a journalist. But there was no inflation then. There was a lot of QE, various rounds. A lot of senior economists were saying there was going to be a great outbreak of inflation, but there wasn't then. So why was there in COVID, but not back then?
Well, there's two parts of back then. The QE you mentioned is in the period after the financial crisis itself, when central banks wanted to stimulate by giving you more money, but taking back treasury debt. They were not directly financing deficits. And I think we saw the most beautiful experiment we could ask about the monetary versus fiscal view. Taking one kind of debt and giving you another kind of debt had no effect whatsoever on inflation. It's like if I take your $20 bills and give you 2 5s and a 10, you're not going to go out and spending. If I give you more money overall, you're going to go out and spend it, which is what we did during COVID. During the financial crisis, there was this huge deficit, of course. Why was that deficit different than the COVID deficits? And I think two things are clear. One is the immense size that COVID was 5 times bigger. The other, though, was, bless their hearts, they did say we're going to do stimulus now, and then we're going to pay it back later. Now, I kind of laughed about that, and I feel sorry about it, but they did at least go through it. And we got to pay off the debt at very low interest rates. So it's not just, debt doesn't just get paid off by raising taxes and cutting spending. If you can have very, very low interest rates, then you can sit on a lot of debt for a long time. And we had very low interest rates. That is not happening again.
Yeah, just on the issue of money, certainly in the 1980s and 1990s even, there was lots of discussion about M3, the statistic M3, the quantity of money in the economy. Basically, no one talks about it anymore at all. I've been writing some fun articles recently in The Australian, just pointing out that Australia's M3 growth is really high. It's about 8% a year, and it has been that for some time. Is that still a factor, the growth of M3 at all, or you prefer not to look at it?
Or M1 or M2 or M3. I forget which M we're supposed to look at. It always changed according to what was convenient. And I have many great friends who are monetarists still in the U.S. who point to M2, which has been growing in the U.S. With our inflation. I don't know what's going on in Australia. The problem with that is the correlation doesn't prove the causation. So when there is inflation, you're going to want to have more money because you need more money to do your transactions. So while that correlation is there, rich guys drive BMWs. That doesn't mean buying a BMW is going to make you rich. And what we do know is that central banks do not control the money supply.
Yes, so, well, that's my next question.
You can't really say M3 causes inflation when the central bank, as you mentioned, they're not even looking at it. They're not even publishing it. They don't pretend to control it. Yes. So now the idea that money determines inflation is much harder. It just doesn't work when central banks peg interest rates and let you have all the money that you want.
Yes. Well, certainly most financial journalists, I believe, still write. They still write under the impression that central banks do control inflation. I mean, is that too simplistic? Is it the fiscal authorities that control it just as much as the central bank?
I'd say it's a dance between the two, and certainly in the theory, monetary and fiscal policy work together to control inflation. So setting higher and lower interest rates does have an effect on inflation, no question about it. But then handing out a lot of government debt that we have no way of paying off, that also causes inflation. So the two work together, and the two also are at loggerheads. This is really going to come up now. So we have in the U.S. 100% debt to GDP ratio. If the Fed wants to raise interest rates to fight inflation, that raises the government costs, interest costs on the debt by a whole percent of GDP. Who's going to come up with the money? So this is what to worry about in the future, is that monetary and fiscal policy are to some extent at loggerheads over inflation.
But of course, central banks are still ultimately government agencies, aren't they? I know in the US there's some discussion about the Fed, whether it's really controlled by the private banks or whatever. But I think they're still government creations. I mean, is it naive to view central banks as wholly independent? I think Milton Friedman himself was rather skeptical of that notion, saying that ultimately they're still government and they should be seen as government.
They are government agencies, and they're put in place by governments for governments' purposes, but they are also quite independent. Governments wisely make central banks independent. It's sort of the way you have a Christmas club of put your savings away until Christmas. It's a way for the government to pre-commit itself that we're not going to inflate it at the drop of a hat. We'll put this in the hands of an independent agency with sharply limited tools and sharply limited mandate, and that will help us to have more stable inflation over time, and not to get excited, every week that today we need to inflate. So yes, they are semi-independent government agencies, and both things are true.
Now, just a question on Australia. Of course, you're not an expert, but we're in the curious situation right now of having a rising inflation rate. The most recent 12-month rate is 3.8% of CPI. It was a little lower last month. It seems to me that most OECD countries, the inflation rate's roughly around 2 and falling in some cases. What is the likely cause of that in Australia? We've got fast M3 growth, as I said. I mean, without knowing the structure of the economy, would you say, it's the fiscal situation? I should add, there's big budget deficits as far as the eye can see at the federal level. The states also have huge deficits, the same size as the federal government collectively. I mean, would you point the figure then at those deficits or at money growth? What's the most likely explanation for this 4%?
Yeah, so I'm not going to even pose as an Australia expert, which I'm not, but we can certainly debate the likely causes. Now, one view, if you superimpose the U.S. inflation through the 1970s and now, in the U.S. it looks just about like 1979, at which point, in the spring of 1979, at which point there was trouble in the Middle East and inflation exploded. So yes. There's a possibility, let's talk scenarios. There's a possibility of replaying that scenario. I would certainly point to large deficits, more importantly than actual deficits. Deficits that a government undertakes in an emergency. We got to borrow now. We got to, win World War II, and then we'll pay back the debt. Those deficits can exist just fine without inflation. It's these endless deficits with no plan to pay them off that people sooner or later say, I don't trust the government to pay that back. The famous bond vigilantes can come and send you. So maybe that day is coming for Australia. Yeah. Of course, Australia, you're an export-dependent economy, so I don't know how you're getting jiggered around by international financial So, changes in the cost of commodities, changes in the exchange rate can feed through temporarily into changes in the price level, but that isn't, permanent inflation. So I can't really tell you if that's, but that would be a more hopeful view. The world is giving up on Australian debt would be a less hopeful view, but your exchange rate's still doing pretty well, and long-term bonds are not. I would look for the exchange rate starting to collapse and long-term bond yields to start to rise as being signals of they're giving up on the debt and deficits.
Now, just in terms of the explosion of public debt that we've seen around the world, especially in the US, 38 trillion, I believe, or something like that. In the US, it's a staggering figure. And I think the deficits are still $2 to $3 trillion a year or something extraordinary like that. I mean, at what point does that trigger a financial crisis? I mean, mathematically, that can't continue forever, I suppose. So when do we reach the point where there's a crisis?
So I'm a little chastened because I've been saying tomorrow for the last 25 years. It hasn't happened yet. But we know that point comes. Now, all crises, if you knew they were going to come tomorrow, they would come today because, everybody would have run out and get their money. We know that can't go on forever. We do know also, though, that at very low interest rates, like Japan, you can have an enormous amount of debt as long as people are willing to roll it over at low interest rates. And when they get nervous, then they're not. So it's sort of like a bank run. The end comes much more swiftly than you think. I worry mostly, though, about the next crisis. So rather than it's just a sleepy day and all of a sudden the bond vigilantes come, let's replay COVID. Let's say China invades Taiwan. Massive financial crisis, global trade falls. Our governments call up financial markets and say, we want trillions and trillions of more debt in order to bail everybody out again, fiscal stimulus, keep the economy going. And then the financial markets go, oh, what happened last time we sent you guys a couple trillion? Didn't you inflate away 20% of it? So I think we're primed to a much more swift breakout of inflation if in the next crisis, unless it's not really about the debt. It's about that endless spending. If we had great plans to pay it back, we could borrow tremendous amounts. It's the lack of plan to pay it back. Conversely, if you get rid of the debt today, And then you go to markets and say, oh, by the way, we just defaulted on all our debt. We inflated away all our debt, but we need you to borrow 3% of GDP next year. Good luck to you. It's that plan to pay it back part that's the real weak link.
Yeah, so because governments have so much debt now, do they like inflation more because they can inflate it away? Is there an intrinsic bias to produce inflation?
Yeah, governments always like inflation. It's a cheap way of raising money without raising taxes. It wipes out some of your debt, and you don't have to say, I'm defaulting on your debt. You just say, oh, inflation came because of shocks, and now I guess we don't have to pay back so much debt.
Yeah.
It helps many governments because government salaries, and if you haven't indexed all of your social payments, you get to cut off the social payments. But the problem is you can only do it once or twice, and then people wise up very quickly. So I think wise governments understand inflation is something you do once in a century. You don't want to lose World War II if that means no inflation. Exactly. But let's not do this every 3 years, guys, because then if you get in the habit of inflating away your debts like Argentina, then no one lends you money in the first place.
Yes. So basically, governments can do a COVID response once, maybe every 50 years, but not every 20 years, right? If there was another virus, they couldn't do the same thing again, right?
I kind of think COVID was not on the level of World War II that demanded this amount of inflation. We way overdid it. Let's face it.
Yeah, no, I agree with you. Totally agree with you.
That's why our governments, if they were honest, they would say, of course there was inflation. We had to spend $5 trillion and we didn't want to raise taxes to do it. So we made the bondholders do it. We used the break glass in case of emergency once in 50 years exception. And they go, really? Did you really have to spend that much money?
Is it strange in a supposedly free market economy, at least that's what we tell ourselves, that the most important price is still set by a government agency, the interest rate? Is that a weird thing in your view?
Yes, that is a weird thing. Yeah. Of course, lots of other prices are set by government agencies that are supposedly free market economies, and there's all sorts of limits on competition and tariffs and other things going on.
So how would it work if they didn't set the price? There were still central banks, but the interest rates just fluctuated according to market.
Yeah, I think that's a lovely. I would like to work towards a system like that, where central banks don't have to decide what should the interest rate be, because the governments don't know what the price of strawberries should be. How are they to know whether interest rates should be high or low? But somebody needs to set the value of the dollar. So somebody needs to set the length of the meter, and somebody needs to set the value of the dollar. So there is something that's they have to do. They used to do that they say, it's gold. You get a 20th of an ounce of gold for $1.
Yes.
That didn't work. But the spirit of that, of we just set the level of all prices and then let interest rates go where they want, that's something I would hope over the long run we can get to.
Yeah. Do you think because they are government agencies, and I suppose some would say they're at least partly beholden to their political masters, that there's a structural bias for interest rates to be lower than they would be otherwise?
You can't do that for too long. So, the central banks have two masters. One is the government and the other is the banking system.
Yes.
And they do serve both masters. And central banks do hold interest rates down to help governments finance deficits until the inflation gets really bad. And central banks do quash a lot of banking competition in order for banks to make more profits. Not so much through holding interest rates down, because you can't do that forever, but through the financial regulations.
Just in terms of house prices, which are a big issue around the world, especially in Australia and Canada and New Zealand, I think also the US, because they've increased, fairly rapidly in the last 5 years. That's partly because of central banks imposing very low interest rate policies, is it not? So are they partly responsible for this surge in prices of dwellings?
Well, that's a good question. I'm not convinced because. How long can a central bank hold a real interest rate down as opposed to just, affect the rate of inflation? It's harder to say that. If you want to see why house prices are high, let's start with the most obvious ones. And there's a funny thing about central banks. We ignore the most obvious things and then focus on these little effects on the margin of little frictions. Why are prices so high? I don't know about where you are in Palo Alto, where I live, I can tell you why prices are high. You can't build a house.
Yes.
Good luck getting the permits to build a house. So we have like these crappy little lots that go for $5 million because you're not allowed to build a house. And when you do build a house, you got to put in $30,000 worth of solar panels and $50,000 to get rid of all the natural gas heating and so on and so forth. So they've made building houses where people want to live nearly impossible, and no wonder house prices go up.
Just in terms of the inflation targeting regime that most Western countries have, the US has, I think Australia has, is that a broken system? And I just want to point out that the Reserve Bank of Australia, our central bank, their forecasts, if they come true, they have inflation going over 4% in the next year or so. If those forecasts come true, the inflation rate will be outside the band of 2 to 3 for 7 years. So it strikes me that they're not really achieving their inflation target. And I think I'm not quite as up to date on the US stats, but I think it's been outside the band there for quite some time as well in various ways. So is it a failed system? I mean, can they control the rate of inflation?
Aha. Well, in the end, as we saw with 2020, and as I just went off on this lecture, it does depend on monetary and fiscal policy together. So in some sense, we've asked central banks to do more than they can possibly do all by themselves. On the other hand, I think the inflation target is a good thing for central banks. In the US, we have an inflation and an employment target, and that's a schizophrenia that is asking way too much of the central banks. So moving to an inflation target, as New Zealand innovated it and Australia followed, that was a good idea. I'd like to see it more enforced. The US one isn't really enforced. Also, the devil's in the details. Is it a target for the achieved inflation, or is it a target for, well, our forecasts will bring us back to 2%, that's enough? The Fed and the European Central Bank say the latter. They just say, well, if we made a mistake, don't worry about it. The only important thing is to bring it back in the future. Since you're being evaluated based on the history, then there's a little, well, what happened, guys, which is missing in the US.
Now, that dual mandate that you mentioned, we have that in Australia as well. I mean, I've always thought it's somewhat naive that central banks can control the employment level or the unemployment rate. I mean, you share that view, but you can probably explain why better than I can.
Well, the central banks have some impact on unemployment. If central banks screw up the economy and you get a recession, more people are unemployed. Duh. But if you want employment, the number one thing about employment is labor laws, minimum wage laws, occupational licensing, horrible schools, social program disincentives that pay people dollar for dollar not to work. And, central banks rightly don't have any control over that stuff. And even in the recession stuff, I think the consensus came, which I think was right in the 1990s, that by trying to match both things, you do both badly. If you just keep inflation where it is, then you don't get these spurts of inflation, and then the central bank has to really crack down on rates and then bring the unemployment up to bring the inflation down, and then the inflation gets up and the unemployment. Just focus on one thing, keep it steady, and the employment will take care of itself. And I think that was wise.
When central banks move their policy rate in normal times, it's often by 0.25 or 0.5 even. 0.5 is considered a large move, or at least it was. I mean, I've always found it a bit fanciful that such small moves in the rate could have any kind of statistically tangible effect on the growth rate of the CPI, say, or it'd be very hard to tease out the impact. Is that a fair assessment? Yeah. That
is a fair assessment. And you just summarized 30 years and 10,000 economics papers that try to do that.
Once I did an FOI on, what's the proof that this works? What's the empirical proof that this works? And there's really not many papers that actually show it does work. It's more of a theory, isn't it? It's not an iron law. It's not an iron law of economics.
I tell you, it's not even a theory. It's a story.
It's a story.
The empirical evidence for how a 25 basis point change in the overnight interest rate affects inflation. Maybe over 2 or 3 years later with, big confidence intervals, the theory doesn't even hang together. So the central banks tell this story of great technocratic competence and how they've got their hands on the levers and the monetary transmission mechanism. Let me tell you honestly, we don't really know if higher interest rates raise inflation or lower inflation.
See, that's hilarious, isn't it? Really, given how it's reported in the press.
There's been the 1980 was really important episode. Central banks raised interest rates and inflation came down. But 10 other things happened too. Ron Reagan got elected in the US. We had a massive fiscal consolidation. We fixed Social Security. We cut marginal tax rates from 70% to 28%. So, one episode is always dodgy.
So so obviously, the central bankers are smart. They're very learned people. They know all this, I'm sure, in private. They don't say it in public, but they're models that failed so spectacularly in the most recent inflationary episode. I mean, I was shocked. I remember they were still forecasting that inflation would basically stay at 3, right up to when it was clearly going through 5 and up to 7 and 8 in the US and Australia. I mean, have they changed those models? And they must be ashamed of them, surely.
No. Now, first of all, it's not the bottom line forecast you can get within that much by just simply saying it'll decay back to 2%. And if a central bank was ever to put up a forecast that did not say inflation will decay back to our target of 2%, they'd look like idiots. Wait, your target was 2%. How can you be forecasting inflation to keep going up forever? So you know what it's always going to look like in the end. And those forecasts are not made from the models. Everybody ignores the models. They all know the models are pointless. The models are more used for what if kind of analysis. But there, too, there's a striking difference between the equations of the models and what the central bankers talk about in the front, which hasn't really changed much since the 1970s. So I hate to tell you, it's like that scene from The Wizard of Oz where, Toto pulls back the curtain.
Yes, exactly. Do you think, therefore, that, financial journalists, and I was one once, they hold far too much reverence for the pronouncements of central banks than they should have?
Not necessarily, because one thing that central banks can affect is the bond market. And so the main consumers of financial journalists' pronouncements are bond traders, and they care very deeply about those up and down 25 basis points. So let me tell you. But I do think overall a great deal more humility would be useful all around on just how uncertain this whole mechanism is.
So just on the model still, I mean, what's the fundamental issue that you would say the profession misunderstands about the inflation process, if you had to?
Well, the profession, academic economics, is at a very strange moment where the equations of the models work very differently from how central bankers talk about inflation. Central bankers say we raise interest rates, that lowers demand, that lowers output. There's some magic of the Phillips curve that lowers inflation. If we can talk down expectations, that lowers inflation. You've heard central bankers talk. The actual equations of current models say that, you won't believe me when I tell you, but I'm going to tell you. The actual equations of the models say that there are multiple equilibria. Anything can happen. Central bankers threaten hyperinflation or hyperdeflation in order for all of us to jump to one of many possible equilibria of inflation. That sounds nuts. That's how the equations of the models work. And so we scratch our heads, and now you know why we don't talk about what the actual equations look like in public.
Yeah, for all the success of Milton Friedman and his fame, do we still live in a Keynesian world? It seems so. You mentioned the Phillips curve and, the idea central banks, can control employment, and certainly in the public debate in Australia, and I think in the US, there's a lot of discussion of demand and whether demand is too high or too low. Now that's a Keynesian concept, isn't it? The whole idea of demand and supply, I suppose. So I guess my question is, are we still in a Keynesian world?
Well, we are certainly in a Keynesian intellectual world. Central bankers don't really think about supply ever. They use demand and output practically as synonyms. We're not in a Keynesian world in the sense that central banks are important. If you remember, Keynesian economics said central banks are pointless. We're in a constant liquidity trap. You need only fiscal stimulus to get going. And, Keynesian economists said the key to growth is just more fiscal stimulus. Well, we live in a supply world. We live in what really matters is none of this. What really matters is long-term growth, and that comes from productivity, and that comes from supply, if you will, efficiency, new companies, better ways of doing businesses, and that has just nothing to do with central banks and stimulus and so on and so forth. That has to do with low marginal tax rates, efficient regulation, open markets, all that wonderful stuff. So in that sense, Keynes is neither right nor wrong, but really irrelevant to the question at hand.
Yeah. So is that the right? So, I guess I have to ask a question. 250 years on from The Wealth of Nations being published, I guess that's a time to consider economics a little bit. Is that the wrong demarcation, Keynes and Friedman? Is there a better demarcation of the profession now intellectually than those two men who are often cited as the the
Oh,
pop.
yeah. Yeah, I mean, even Keynes, I don't know if you've ever tried to read the general theory.
I have. I must have. It was very hard going.
Yeah, really, Hicks gets credit, who put a system of equations down that bore some faint resemblance to whatever Keynes' scribbling was about. And that has been passed by in economics for good reasons. It looks at each year in isolation. Whereas when you decide whether you're going to save or invest, you think about, how's this relative to the future? So, that was the insight of Bob Lucas and Tom Sargent, the whole rational expectation school. And they kind of won how we think about things in academia. But yeah, the most important thing, Smith, let's think about the world in 1776. We are not fabulously wealthier than Smith because our governments went on a big fiscal stimulus program.
Yeah, exactly.
And we're not fabulously wealthier than Smith because of industrial policy or tariffs or redistribution or unions or anything else. We're fabulously wealthier than Smith because of growth, because of, new ideas, new businesses. They come in, they bankrupt the old businesses. The looms came in and sorry for the weavers. Yes. But yay for the factory workers. That's the process that really matters over the long run.
Just taking a big step back, what is the prognosis for fiat money systems? I think we've all seen the rise of crypto. Some people say that reflects a concern about the reliability of fiat currencies. It's certainly true throughout history that there are sharp structural changes sometimes in monetary systems. What's your view of fiat currency going forward?
Well, Bitcoin is a fiat currency.
Yes, I guess that's
it's not backed by anything. What's going on now are stable coins, which are just a way of implementing a money market fund and getting around a bunch of regulations on money market funds, but it's still backed by the US dollar. So far, there hasn't been a good alternative to our governments, which are not really fiat monies. The whole point of fiscal theory is that they are backed by the willingness of governments to charge taxes in excess of spending in order to soak up that money. They're backed by taxes same way it used to be backed by gold. Now, how good is that backing? As long as our governments are faintly responsible, it's a darn good system.
Yeah.
And I hope so. But where does a financial crisis come from? It comes from a bunch of debt that nobody knows how it's going to get paid back with phony baloney accounting, and nobody's worried about it. That's sovereign debt for you. So a big strain would come on it if we have a global sovereign debt crisis and a big inflation. But for the moment, crypto is not going to take over.
They're not going to take over. And what about the preeminence of the US dollar? That's worth asking. Is that going to be the case for the next 50 years, or is it waning in your view?
It's going to be the case. Remember, it used to be the pound sterling.
Of course. Yeah.
Now let's hope that's not China who takes over. I think the advantages to the U.S. of having that preeminence are vastly overstated. We got to print the world's money, so we got to give you guys money, and you put stuff on boats once. That was nice. Thank you. But you don't get to repeat that over and over again. It won't go away though until either. First, the U.S. has to really screw it up. So if we start defaulting on our debt and inflating away our money, then people will look for alternatives. You can't go to China because it's not a freely convertible currency. So who could take over? You need a government that is really responsible, always pays back its debts, doesn't default on its debts, has completely open capital markets, open trade, and is fairly big. So I got everything there is Switzerland except for the big enough.
Yes, exactly.
And so there's no real challenger for that in the near future.
Just on the modern monetary theory, which is not mentioned anymore, but a few years ago it was very popular and everyone was talking about it. What are your observations on that?
Well, it was neither modern nor monetary nor a theory.
That's right.
It was like I read and reviewed Stephanie Kelton's book. It was mostly a wish list of, wouldn't it be lovely if money grew on trees and we could just pass it out? And its bottom line recommendation was, in the years of stagnation, we just need to print money and hand it out. We'll all get wealthy and the economy will grow. Well, we did what you said. We printed money. We handed it out. What'd you get? 10% inflation. And then modern monetary theory, you stop hearing about it so much.
Just a few more general questions before we finish up. I have to ask you about the success of the Argentinian fiscal consolidation, which is pretty dramatic, I think, in historical terms. 5 percentage points or so of GDP within 6 months under Milei. Most economists, or at least the famous ones, all wrote a letter saying it was going to be a disaster. And we all know economist letters have a very poor history of being right, and they were wrong, right? There was there was a short hit, but the economy's booming. What lessons are there for the rest of the developed world?
You can practically forecast economies the way, if you want to take my dog for a walk, when she goes right, you go left. You'll always get where you want to go. Nobel Prize economists have a terrible track record. Malay, so it just blows up all sorts of certainties. One is that you need tight money and high interest rates in a recession to get rid of inflation. Malay cut the deficit, and bingo, inflation came down and interest rates went down. There was some turmoil, but there wasn't a huge recession. So that's lovely. It's also, no country can cut its deficit. Oh, it's politically impossible. Well, if Argentina can do it, maybe the US and Australia can do it. And I also love it. When people say it's politically impossible, I say, okay, let's take a bet. What's the chances that Argentina elects a libertarian president whose dogs are named Hayek, Mises, Robert, and Lucas? And he stays in office for more than 5 minutes. So, when things get bad enough, all sorts of changes can happen.
Just in terms of the next crisis that at some point we will have, the global financial crisis, the source was the financial system. Is the next one going to be the source, the government, as opposed to the financial system, in your view?
Well, usually there's a source, which is a little spark. So in that sense, the source of the financial crisis was the idiotic system of subprime mortgages.
Yes.
The securitization business that evaded financial regulations to build up a lot of risk there, which they've had they've had 15 years to get around those financial regulations. So ready to go and waiting for the bailout guys. So where does the spark come is one question, but I certainly think an amplifier is going to be a government debt. I gave you the scenario of, you suppose the spark is China invades or blockades Taiwan, then our government's response to that is a river of money. Well, that may not work this time because government debt is, is finite amounts our governments can borrow, just like anything else is finite.
Yeah, there's a concern around the world that productivity growth is stagnating in the Western world. That's the official statistics tend to bear that out. Personally, I've always had some cynicism about the statistics, the way they're put together, GDP, how do you know the inputs, blah, blah, blah. Is that something that you're worried about, the stagnation in productivity, or
Yes.
is this just an artifact of statistics?
No, so my whole professional life, I've been worried about the stagnation of productivity. Growth used to be, I'll give you US numbers, used to be 4%, then after 2000, it cut to 2%. Now, cutting that in half is a disaster. And it's even worse in Europe, where growth is now zero. I mean, the UK and Italy, two of my favorite countries in Europe, just stopped growing in 2010. So economists have, what happened here? That this miracle that started with Adam Smith, is it over? And there was two schools of thought. One is we've run out of ideas. We've done everything we can with electromagnetism. Sorry, no more ideas. It's over. The other is we got all sorts of ideas. We just can't get the permits. And if you've ever tried to rehab a house in Palo Alto, the idea of we have good ideas, but we can't get the permits rings true. We have a welfare state full of horrible disincentives, very high taxes to start, hard to start businesses, get new innovations going. So that's where we kind of sat until AI came along. And then all of a sudden people are worried, oh, AI, now we're going to repeat the industrial revolution in 5 years. Well, bring it on. Everything I've been worried about for 40 years has now gone away. Unfortunately, I think AI and similar advances in biotech and the deregulatory push that's going on now around the world, the world realizes we've strangled the industrial policy on climate policies that don't do anything to help the climate. They just look good and raise electricity prices. So that's going to get fixed. Nuclear power is going to come. Biotech's going to come. AI is going to fuel it. This is like inventing the steam engine, which is great news, but don't expect it to change everything in 5 years. Every time before, this is the beginning of an S-shaped diffusion that will bring us back good, moderate growth, I hope, so long as we let it. Our governments are perfectly capable of stopping it in its tracks and regulating it to death.
Yes. And so you're not worried about AI taking everyone's jobs as some people in the media are, or even, kind of making universities less important or less necessary.
Yeah, that Gutenberg printing press, the monks are all out of a job copying manuscripts. They're sitting in the gutter now. The tractor, did you know it's 70% of our people work on the farm? 1900. The tractor's invented. The farmers are all out in the gutter. And this has happened hundreds and hundreds of times. It's very clear AI makes people more productive, frees them from their drudge tasks. Output in industries that can use AI, output will expand, and we're all going to become more productive with higher wages. It's going to be great, trust me. Although there will be some losers, when the looms came in, when the mechanical looms came in England in the 1800s, the weavers got hurt for a generation.
Yeah.
The weavers' kids did great. The farm workers who got to have factory jobs did great. But, some people will lose their jobs. Yeah. Most people will become much more productive. People will get different jobs, more productive jobs. New industries will come in. Old industries will expand. For most of us, this will be like every other time before. Like when the Xerox machine came in and all the secretaries who used to type carbon copies, they're out of a job. No, they found new and better jobs.
Now, would you say the weavers this time around are going to be the junior lawyers, junior doctors, junior accountants? Basically, the white-collar workforce is going to be hit this time rather than the manufacturers?
Because output can expand. So I think a junior lawyer will have a much more fun job of using AI in order to produce a document much more quickly than junior lawyer used to go down to the library and read things. Oh my God, junior investment banker was making spreadsheets at 2:00 in the morning. They get to now, and not very smart people get now to access the best people in the world. So actually, it's going to be great for those kind of middle employees who can now be tremendously more productive.
So the final topic, your view on the Trump administration 1 year in, and of course, from an economic point of view, let's start with tariffs. Everyone thought the world was going to end last year with tariffs, and the US inflation rate's still only 2.5% or something. So there's been no huge inflationary spike, as some people predicted. What's your view on the tariffs, and how bad have they been?
Well, I'm an economist, so unless I say tariffs bad, they take away my union card.
Exactly.
Adam Smith explained why tariffs are a bad idea. I was not, most economists did not say this would be horrible. Tariffs are like a 20% tariff is like a 20% sales tax. Well, you've got a 20% VAT. I've got a 10% sales tax. Not the end of the world, right? So it's one more of those little annoying sand in the gears that pervades the economy. There's I'm leaving out the national security case for some small targeted tariffs. But I think the tariffs are one of those small supply side headwinds paired with some extraordinary supply side tailwinds. We have a sane energy policy at last, where they're getting away a lot. Just today was announced that a lot of the labor regulations that favored unions are going to get swept away, and it'll be easier for people to get jobs. You can only get job because the company has the right to fire people that don't work out. That's one of America's great strengths, is that flexible labor market. We have very few of the protections Europe has, and we have a 4% unemployment rate. We have lower unemployment and less labor protection, that it works out. So we got some headwinds and some tailwinds, and I think they're balancing each other out. So I wish we could get sanity on tariffs, or at least just stability. Companies don't know where to build if they don't know what the tariff is going to be. They don't really care about tariffs so long as they know what it's going to be when the plant comes online.
Yeah, so that alludes to my next question. Is there any evidence that manufacturing has come back, so to speak, to the United States at all? That's what Trump wants, obviously. But as you say, I guess if it's uncertain, you wouldn't move.
Well, who knows what Trump wants? I mean, tariffs are an answer in search of a question, and there's always 5 questions. And if you say one isn't working out, they'll come up with another one. Trump has used the tariffs to bludgeon other countries into doing what he wants. And that has been far more effective than I thought it was going to be. Now, is what he wants the other countries to do useful? Europeans paying a little more for defense probably is good. It's bringing in a lot of ill will. Notice nobody else is with us in Iran right now, and that might have something to do with us being mean to you about tariffs. So I would think about tariffs in that sense. No, it's not bringing manufacturing back because, among many reasons, it doesn't make sense to bring manufacturing back, even under tariff protection. So I wouldn't look to see much of that, except for, we'll force car companies to build some assembly plants here, and it'll all be jiggered around, to get political blessing. And the more of the economy is run by governments and who gets political blessing, the less well the economy does, because Those Chinese cheap electric cars are really cheap compared to what you can bring back manufacturing in the U.S. We don't want to go there. That's the way Argentina went. That's, protectionist policies stagnate.
Mm. Do you see any likelihood of major economic reforms from the Trump administration? I know it's hard in the US with a two-year political cycle, basically, but the tax system's a mess. Obviously, you probably say that, well, the taxes, you'd have to say, are not high enough given the level of spending. There's a huge structural gap. I mean, you'd probably argue spending should fall, as I would, but that's not going to happen.
Well, but taxes are a Swiss cheese. So we have very high statutory marginal rates with a Swiss cheese of exclusions and deductions. So a good tax code brings in lots of revenue at low marginal rates, at low economic distortion. Ours has extremely high marginal rates, doesn't bring in much revenue. So it's kind of the opposite of what you're looking for. Yeah, so a big tax reform is not in the cards in the near future, though I know the Treasury is working on it. We've had enormous amounts of deregulatory stuff going on under the radar screen where nobody's paying attention. Maybe we should leave it there so nobody does pay attention to what's going on. Yes. But a lot of that is executive orders. So,
you mentioned energy. That's something that's a big issue. What would you highlight on the energy front that's changed?
Day one, we are not going to, we just got out of the 1992 UN agreement. We got out of the Paris Agreement. We're not going to, the whole Obama-Biden era subsidy scheme of we're going to force everyone to buy electric cars, except they only save the climate if they're made in America with American union labor and American, Chinese electric cars. No, those don't save the climate. So extraordinarily costly policies that don't actually save any carbon. If they actually save some carbon, the poster child is the California high-speed train, $120 billion, 0 miles of track laid. The train might actually start running the day the last gas-powered car gets off the roads. That kind of horrible inefficiency is that was just day one executive order, day 1.5 executive order. We're not going to regulate AI to death like Europe just did.
Yes.
You got great stuff like that happening. That has to get codified, though, eventually in legislation. Yes. Otherwise, Gavin Newsom will come and he's got better hair than I do, and he's going to undo it all.
Now, just finally, the CHIPS Act, which I think was Biden administration, I think that's still on the books. Has that had any success in bringing semiconductor manufacturing to the US?
Well, it seemed to have had success in bankrupting Intel, and now the government took over a shareholding in Intel. So socialism lives in the U.S. The government owns a chip company. But in the end, I don't know the details of what's going on in chips. It's still the high-end stuff still made in Taiwan.
Yeah, would you describe Trump as a free market guy or more a Peronist to the Argentinian?
I describe him as a deal maker. He is a New York City real estate developer, and he likes to make a deal. I don't think he has set ideological visions one way or the other. There's a lot of free market in there, but a lot of common sense in there. But mostly he wants to make a deal.
Yeah, what's been the greatest contribution of economics? 250 years since Wealth of Nations published. This is final question. What would you highlight as being the greatest benefit it's provided to humankind?
Well, go look at for 100,000 years, people lived on no more than $1,000 a year, mostly a whole lot less than that. And then in 1776, something miraculous happened, and we are 80 times better off. And not just in terms of numbers. Life expectancy went from 35 to 80. Child mortality went from, 20-30% down to next to nothing. This is all what happened from free market capitalist economics. And it didn't happen from the government running things. The government were trying to run all sorts of things in the 1600s. The mercantilist government of the 16 and 1700s didn't produce that growth. That growth was freedom. And really, that's the only freedom. It's the only nonviolent vision of the economy. It's not the government taking from A and giving to B. It's if you start a new company, you get to reap some of the reward, and everybody else gets 99% of the reward. That's wonderful. Let's hope it stays on.
Yeah, well, that is a great way to end. Thank you very much, John Cochrane. Fantastic interview, and we'll be in touch, I'm sure. But thank you again for speaking to the IPA.
Thank you. It was great fun.